Is there any way we can tell what's going to happen in the crypto markets in the coming months and even into early next year? Are there any clues of what's coming our way? That's what I'm going to look at. We're going to do a broad market overview going all the way from the stock market to altcoins and touch on each category to get an idea of what to expect in the coming second half of the year, which I think we're arguably already in and heading into 2025. Is the bull market still here? Is it delayed? Are we going up? Are we going down? These are questions I've been talking about for a little while, but I kind of want to, take a more bird's eye view to explore answers to this. This is crypto simulation theory. I am the Gaussian Snake, and I have a Telegram chat that I'd love you to be a part of called the Snake Pits. Link in the video description below. Perfectly free, awesome community of about 270 fellow traders, just like you and me, trying to navigate this challenging market during these times. Just a reminder, nothing in here is financial advice. Let's start off with kind of an interesting thing that I don't talk about often, and this is United States debt balance on credit cards. And I found this to be kind of interesting. This data is available going back to March of 2003. And you can see that there was a pretty substantial peak right before what? The great financial crisis. And yeah, a lot of debt got wiped out for some of the wrong reasons. Wasn't a good time. Double bottom, March of 2013, March of 2014, and then debt started to pick up again when the market was bullish. And we reached another peak in December of 2019, had a very abrupt fall straight into March of 2021. Now, keep in mind that we did hit kind of some kind of bottom in June or September of 2020. And this big fall, I'm focusing more on this big volatile fall in credit card debt. Interest rates were coming down in a big way during that time. And you can see here too, we've had credit card debt run up inverse head and shoulders right here to record levels. And it's just barely coming down now. At this last reading, this was March of 2024. So this looks like it's like quarterly data. I don't know why this is showing on a weekly time frame. So this is a pretty slow moving chart in terms of like how it's set up, but it'll be kind of interesting to overlay this if we can with the federal funds rate and just kind of see if we can notice anything. So what you can see is in December of 2008, interest rates were super low, and then debt went down along with the great financial crisis. You can see here in December of 2018, right around the time that the rate cuts happened, debt started to go down, which makes sense because if the cost to borrow money is less, people can pay off, they can transfer balances, pay things off a lot more easily. And we see something similar potentially setting up again with rate cuts. So if, we follow past history, we would anticipate that we won't see this start to fall in a meaningful way until rate cuts actually happen. But we are at some pretty high levels. So I'm not calling this data out to kind of like, make any predictions. It's just more of something I thought, would be good for you to notice. Something else I wanted to point out to you is the reverse carry trade. So for those of you who are not familiar with this, this is a forex concept, but probably one of the most important things to pay attention to in the market. So what you have here is the Japanese yen versus the US dollar. And we have something kind of troubling that's been happening with this. You can see that it appears that the yen has bottomed against the dollar, and it's basically tangling around right now with the median line of a red concave down, arguably Gaussian channel. But if you go back in history, we have to go kind of pretty far back to really see what happens with these kind of moves. Just look at what happened in 2007. We had, almost like a triple bottom on the Japanese yen US dollar carry trade. And when the Japanese yen absolutely broke out against the dollar, this was not a good thing. A lot of people were getting margin called who had borrowed in yen, and now they had to, figure out how they were going to pay those debts back. So this is like basically sectors of the market being very over leveraged, and I think we're seeing that happen again. So this is something just to watch. It's concerning for sure that we got this giant pump right here. So we will need to keep an eye on this. I am not a forex or economic expert, so this is not something I'm going to spend a lot of time talking about. But I do at least want to point it out to you so that you're aware of kind of what to look for. So kind of turning our attention to the stock market again, coming in just a from a bird's eye view down to something a little more. Um, I mean, still pretty broad, right? So the S&P, we can see that the S&P has been quite bullish since putting in more minor bottom of around 5,122. And so kind of wondering, well, what's going to happen? I've done extensive video analysis on this. I don't really feel a need to repeat it too much, but for those of you who have been following me for any amount of time, know that I think my base case is that the stock market will likely pump into rate cuts, which is right around here, the week of September 16th, I think September 18th, and then I expect the market to kind of roll over after that. That's just generally what happens. I don't really see why this time should be different. It could be different, and maybe I'm being a little too deterministic, but that's kind of my base case. It doesn't have to roll over right away, but if I just put um, let me put the federal funds rate back on here and do an auto fit on the data. Okay. So, oh, I actually accidentally put the same axis. Let me fix that real quick. So let's put it on the, let's do this one more time. I must have accidentally pressed, I meant to put new price scale. Yeah. And let me change the color of it. Let's do like white. I think white's probably good. Yeah. And let's change this to like a 2 week time frame. So you can see markets rally the hardest once we've hit a rate cut floor. Now this is the S&P, this is not Bitcoin, okay? As soon as we hit a rate cut floor, there's this huge capitulation, and then the market just took off from there. Here we are again at a pretty high ceiling, and you can see that we're kind of rallying into this presumptive rate cut. And if you go back in history to before crypto existed, I mean, this is, like I said, this is the stock market. You can see we've had these times before where as soon as rate cuts happen, the market kind of rallies into them. In this case, put in a slightly higher high and then just started to roll over as the cuts started to go more volatile. So what I've noticed, I've talked about this in previous videos, is the rate of change of the rate cuts that really seems to affect the drops in these prices and this hard landing that we had, known as the Great Financial Crisis. And here's another example of rate cuts being bearish for the market. This wasn't even a rally into them. The market was actually tumbling during them. So that's just how bad things were. And then the market actually started to rally slightly before we got a rate cut floor. So what does this have to do with Bitcoin? I do want to kind of look at like the correlation with the stock market and Bitcoin, and kind of get an idea of how the two are related. Because I mean, the stock market has been pumping, but Bitcoin's just kind of been crabbing. And this is a phenomenon that also happened in the 2019 2020 crab fest, slow bleed before it resolved to the downside. So but the thing is, like when rate cuts happen, they can be initially bullish. So we could have a bullish September, even a bullish October, but eventually it kind of catches up with us. The damage in the economy is done from the rate hikes, and the market starts to roll over. So that is my base case. I don't know exactly when the rollover is going to happen, but I think it may not happen right away, but I think it will happen. And then I think we'll hit a rate cut floor, if I had to guess, somewhere around maybe 3%. I don't know, could be lower, 2 to 3%. It's hard to say. I'm just kind of eyeballing 3% based on what's happened in past history. Okay, so let's move over to Bitcoin, and I want to do a correlation study on the 2 week time frame with Bitcoin and the stock market. But I just want to remind you what happened with Bitcoin the last time we had rate cuts. We only have one instance to one data point to really point to, and that's the 2019 cycle. So you can see that. I wish I could let me blow this up a little bit. Let me move this up. Yeah, I like it being like this. So what we had here is a pump straight into the first rate cut. And literally as soon as the rate cuts happened, Bitcoin started to roll over. And when they got more aggressive, Bitcoin capitulated along with the stock market. And what I'm going to do now is pull up a correlation study with the stock market, specifically the S&P 500, to get kind of an idea of how the correlation was going on with the stock market back then compared to like how it's going on now. So if we pull up the S&P 500, okay, and apply that, let me turn off the Snapple RSI for a minute. I just turned on something else here. I'm not even sure what I turned on. Let me fix that. Yeah, I don't really want to turn on the pi cycle top right now. A little too early for that. Okay, so let's orient ourselves here in 2019. Here we were in, it looks like going into rate cuts. And at that time, Bitcoin was actually, you see the green on this correlation, Bitcoin was actually highly positively correlated with the stock market. Um, in fact, Bitcoin had not been negatively correlated with the stock market since the bear market of 2018. It actually had been positively correlated for most of 2019. So Bitcoin was generally following exactly what the stock market did. But once the rate cuts happened, you'll notice that in December of 2019, Bitcoin actually diverged from the stock market and was doing the opposite of what it was doing. And then coming out of that rate cut cycle, and once things started to stabilize and we headed into a proper bull market, again, the stock market and Bitcoin were more or less doing the same thing. And if you study the history of the stock market with Bitcoin, they generally spend most of their time being positively correlated, meaning that Bitcoin tends to follow whatever the stock market does more often than not. And so you can see that there are very few times where it didn't correlate positively. So one of those was May of 2014, January of 2015, October-ish, September, October, August 2018, November, December 2019, a little bit in August of 2021, and now most recently it's starting to head down again. So I don't know if this is going to continue to go down and the markets are going to not correlate, but if you look on a weekly time frame, you'll notice something a little bit different happening. What you'll see on the weekly time frame is that, all things considered equal, we are already pretty negatively correlated with the stock market. And this is also not something that happens super often. This happened in quarter three and a little bit of quarter four of 2023, happened briefly in June of 2023, happened in December of 2022, and then it hadn't happened for over a year previous to that. So generally, once we get down to these levels that we're at of negative correlation with the stock market, we don't tend to spend like a lot of time down there. And we can, I mean, look at what happened in August 2016. We spent months negatively correlated. So we should keep that in mind that it can happen. It's just not what has happened traditionally. We are pretty negatively correlated with the stock market. Let's see the level that we're at of negative correlation. This is like negative zero point 0.4, like not quite negative zero point 0.5, but just a little bit higher than that. I'll just draw the line around negative 0.49. So that's a fairly strong negative correlation. Again, meaning that whatever the stock market does, Bitcoin tends to do the opposite. Okay, and you can see that again in 2019 on a weekly time frame, um, things look a little bit different, right? So on a weekly time frame, for measuring weekly data, Bitcoin was actually very negatively correlated with the stock market all the way to January of 2020. And only around the time that we're getting close to the final rate cut did it get positively correlated for quite a while. Now, I mean, you can't make any predictions again off of this data other than to say that Bitcoin usually is going to do what the stock market does, and the periods where it doesn't do what the stock market does are fairly rare. Now, we would, of course, want Bitcoin to round the corner here if the stock market starts to enter weakness, and we'd love to have, I'm sorry, start, that's not what I meant to say. We'd love for Bitcoin to be down here in negative correlation territory if the stock market starts to get weak, because then that would imply Bitcoin would get strong. But realistically speaking, the stock market is less risky than Bitcoin. And right now, the market's a bit uncertain. People don't know what to do. They don't know where this market's going. It's just a big crab fest. Obviously, this is going to break up or down. My base case, of course, is that we'll probably do at least kind of like what the stock market has done in the past, which is pump into rate cuts. I mean, there's no guarantee that happens. And there's also no guarantee that we make a higher high. For all we know, we could hit 64, 65K with Bitcoin, and that could be it, right? And we could roll back over. I think the rally will probably have more legs to it than that, but you just have to prepare for anything. So you can see in Bitcoin's history, we don't tend to spend too much time underneath this yellow line, but we can spend some time. It's just generally not a lot. An exception to that would be parts of 2016, where we spent quite a bit of time underneath there. but usually we don't. So um, I guess this is good news if the stock market continues pumping and Bitcoin, puts like an inverse head and shoulders or something here, and then starts pumping with the stock market as we head into the end of the year. Generally speaking, the end of the year is a good time for crypto, especially October, November, even into December. You can get that Santa Claus rally. So my base case is a pump into rate cuts, and maybe we even still stay elevated for some time after rate cuts, and maybe when they start to get more aggressive, crypto starts to come down, and it could even take all the way till quarter 1 of next year for that to happen, or it could happen quickly. I don't know, but um, I don't think it's going to happen quickly like it did in 2020. I think my guess is that it's going to take longer to roll over. I think we'll get a pump, probably stay a little elevated for a while, and then begin our journey down just when everybody thinks, oh, um, bull market's on, and maybe it is, but I don't think so. I don't think the bull market for crypto is going to be on until rate cuts get uh, until we get at least like a pretty drastic rate cut. Now, if the first rate cut is really drastic, that could send the market down pretty quickly too. So I'm looking for the rate of change of rate cuts, not necessarily just like a 25 basis point rate cut. I don't think that's going to do much to the market. A 50 basis point rate cut could. So again, I'm not psychic, so I can't predict these things, but those are just sort of my thoughts as far as Bitcoin goes. So, what about the rotation within crypto? Let's talk about that next. So, I'm going to turn off the federal funds rate. There's really no need to look at this anymore, and just kind of focus on Bitcoin and look at things like Bitcoin dominance, ETH Bitcoin, those sort of things. So, I want to point out something that I noticed. A little while ago that's played out now, and so on the weekly time frame we have got a death cross of the 50 and 100 week whole moving average. Every single time that this has happened in Bitcoin's history, there has been a rally that has occurred. That rally sometimes happens slightly before the death cross, it can happen with the death cross, or it can happen a little bit after the death cross, but there's always been a rally. Sometimes the rallies have been quite dramatic, like this one here. This marked the end of the bull market for Bitcoin in 2021. Um, there have been death crosses that have not been so dramatic, like the bear market of 2018. The death cross didn't mark anything other than just a bear market rally. But if you go back in Bitcoin's history and study every death cross of the 50-week and the 100-week whole moving averages, not simple moving averages, but whole moving averages, HMAs, you'll notice there's usually a pump, but what it also shows is that there's a dump afterwards. There's a pump and a dump. And so, you know, I understand the reasons for the dump. Like the dump is pretty obvious, but I was having trouble trying to understand the reasons for the pump. And someone in my Telegram group actually ran a question, said, why do markets pump before rate cuts, and then dump afterwards, but focus on the psychology of the pump part? And so I want to share with you what that person had to say through actually AI. So this is from my Twitter, which is, why do markets pump into rate cuts and dump shortly thereafter? And so this is from Claude AI. The pump part of a pump and dump scenario around rate cuts is an interesting phenomenon driven by market psychology and investor behavior. You have anticipation of economic stimulus. So it's kind of weird, but you have people get excited that rate cuts are coming. And I think the pump is sort of a reflection of that excitement that there's going to be more liquidity and they're going to get rich. There's an increase in liquidity. Not the cuts themselves don't cause it, but the lower interest rates are sort of indirectly a form of monetary stimulus. Yield seeking behavior. So bonds are going to become less attractive. People are going to be looking for higher short term yields in other assets like stocks and eventually crypto. Short term trading opportunities. So um, some traders might try to capitalize on the expected market movement by buying in before the rate cut and then sell it up, buy the rumor, sell the news, right? And I think this really can't be understated enough or overstated enough, which is it's a self-fulfilling prophecy. So markets sometimes they believe if something's going to happen, they cause it to happen. FOMO, as markets start to rise in anticipation of rate cuts, investors jump in, not wanting to miss out on potential gains, and just positive sentiment around rate cuts. So this is the thing, is like the pump is based on short-term thinking, and it doesn't necessarily reflect long-term economic realities. So the subsequent dump occurs when investors really process oh, rate cuts were happening not because the Fed cares about, crypto or even that much about the stock market. All they do care about the stock market because it is a reflection of economic health. But the cuts are happening because the economy's sick and because unemployment is high, and then the market kind of processes all that and freaks out. So I think this is a really cool answer that AI was able to kind of come up with. So kudos to the person from my Snake Pit Telegram who contributed that alpha to us. So really cool. Coming back to Bitcoin, okay, I think I'm going to switch gears to Bitcoin dominance. All right, Bitcoin dominance is kind of a hard read right now, but that pesky Bitcoin dominance won't just leave us alone, will it? Um, so, what can we say about Bitcoin dominance at the moment? Well, Gunnar EMA has been bullish all the way since January of 2023. So we're coming up on, I mean, over a year and a half, like almost a year and 2/3, a year and 3/4 of Bitcoin dominance being in a bull market. But look at these touch points on the red lower Gunnar EMA band, one, two, and a bunch here. It's rolling over yet again. So, I take this as a sign, along with just looking at something like the reverse Chandy momentum oscillator, that the end for Bitcoin dominance is near. I think it is. Now, I don't think the end is now, but I think it's near. Okay. We've had kind of a bit of a bearish divergence going on with Bitcoin dominance. Actually, I'm not sure if I really call it a bearish divergence, more of just this channel that's been going on. I mean, um, yeah, I mean, someone might even call that a bull flag. Uh, I'm not the best with structural TA. I do see an inverse head and shoulders in here. So I guess the thing is like Bitcoin dominance does still look bullish, but I think its days of being bullish are numbered, and I think they're going to end soon. And you can see this compression happening in here, and this is likely to break one way or the other. If I had to guess, I think this will probably break to the downside ultimately, right? I think this is going to spill out, but yeah, this is a really hard thing to read, right? It's almost like a triangle formation because you could even connect this here. Yeah, I think we're looking at like a triangle. So, yeah, we'll have to see how this breaks, but I think this is more likely to break to the downside than upside. We have one, two, three, four touch points at the top here, but we also have one, two, three, four touch points at the bottom. So it's a hard read. I'm slightly bearishly biased because of other reasons. Look at right here. We have an inflection in the Gaussian channel, concave down. That's bearish. That generally hasn't spelled good things for Bitcoin dominance is not a project, but you can treat the technical analysis of it very similarly. Sorry, my camera turns off automatically after 20 minutes or so. So yeah, I think Bitcoin dominance is kind of coming into the end of an era fairly soon. The other thing that makes me think that Bitcoin dominance is kind of close to topping out is the wave trend. Like if you look at the wave trend for dominance, um, you can see that it has spent quite a bit of time up in the red region, but again, it's been putting in kind of like these lower highs, but then it just shot back up again. And this is the most time Bitcoin dominance has ever spent in the red region. So I have to think the odds are that, all these tops that it's forming on the wave trend are going to ultimately just resolve to the downside. I think that process is likely to begin in quarter 4 and result in a reversal. And I did a video, not that I think my video before this one actually was on kind of the coming altcoin season, if you really want to call it that. I don't know that I would really call it an altcoin season that might be coming as much so much as maybe a reversal. Like if we go to other dominance briefly, you can see that we're at some pretty low levels here on the wave trend, and just the opposite of Bitcoin dominance, right? It looks like we're probably going to have at least some relief, right? I don't know that this will mark the start of a major altcoin season quite yet. I actually don't think it will, but I think we're going to see some relief for the altcoin market for sure, coming most likely in quarter 4, um, before we probably head down again after that. The after that could be quarter 1 of 2025. I don't exactly know. I imagine that'll probably coincide with the final dump probably somewhat near the anticipation of a rate cut floor. What I'm really looking to sort of mark the transition away from Bitcoin dominance to alts and ETH is ETH Bitcoin. And you can see that ETH Bitcoin had a pretty significant moment in November of 2023 on the wave trend, and it's actually been putting in higher lows ever so slightly. And this is what I love about things like the wave trend is they can spot these things. I mean, the last time this happened was in August of 2019, and it was just pretty much straight up after that. And the time before that was October of 2018. You had like a little bit of a bump and then back down. Um, January 2017. So these events don't happen often. Okay, they don't happen often where you're down here on the green. So could we head back down to the green again? Yeah, I think we could. I do think the structure of lower highs may be broken. We may see something similar to what happened in 2019. Because my base case, honestly, is that ETH Bitcoin does need to enter into this red box and spend a little bit of time here. And I feel like that's going to mark the bottom for ETH Bitcoin. When that does happen, I think you may see something like a double bottom, but I think probably sometime very soon we're going to be in this red zone for ETH Bitcoin. And that's, I think, going to also correspond to a top on Bitcoin dominance, which I feel is very nearby. I think really we just got to get to rate cuts and to see this trend start to work on changing in the other direction. I don't think the bull market for ETH Bitcoin is going to take off right away, though. I think it's going to take some time to consolidate down here. And honestly, I think the really major altcoin season that we've all been waiting for probably isn't going to happen until 2025. So I don't mean to like disappoint you or anything. 2025 is actually not that far away. Just have to be patient if you're holding a lot of altcoins. That is a risk that you took by investing in something highly risky during a risk off time. So as long as you're patient and you have a long enough timeline, you should be fine. And if you're not heavily invested in alts, which is probably the better strategy from a risk management point of view, then you would probably want to sort of think about getting more aggressive with converting Bitcoin to Ethereum as we sort of like round out 2024 and head into 2025. Start thinking about kind of doing that because you're going to have, in my opinion, the accumulation opportunity of generational wealth accumulation opportunity of a lifetime is probably going to happen, especially for those of you looking to convert Bitcoin to Ethereum. I think that's coming soon. So overall, I'm really bullish on crypto in 2025. But heading into the end of this year, kind of feeling a little bit mixed as we go. Like, and I don't even know exactly how this is going to play out. If I did, then I wouldn't need to be invested. I'd already be rich. I'm just always getting predictions right. But I think that the most likely path is just what's happened in the past at the stock market, some sort of variation of that, or even the Russell 2000 index, the top 2000 small cap stocks index of them. I think that we're likely to see the market pump and rally into rate cuts. And if the rate cuts are not that aggressive, then probably continue to pump even after that. I don't think the S&P is going to go soaring to like, seven, 8,000. I just don't see that happening. But I think it certainly could put in a higher high. Could happen. Um, and I think, we're likely to probably have a pretty promising October, and maybe even November. I'm not really 100% sure how September is going to look. I think it may actually look kind of bullish. Um, and it's kind of hard to say exactly what's going to happen. If the rate cuts are gentle, they're not aggressive, and the Fed is kind of like not looking to doing it aggressively, we could see the market rally into that, or we could see the market dump on economic weakness. So um, really, me trying to make a prediction is kind of pointless. I think the best thing you can do is just prepare yourself for what typically happens, which is a pump into rate cuts and then a dump sometime after, and a very major dump when we get near a rate cut floor. That has happened almost every single time. So how do you prepare for that? Well, number one, not financial advice, by the way. This is just talking theoretically. Number one, have a plan and stick to that plan. I think having one foot in the market and one foot out of the market does make a lot of sense at this time. That does not mean that you have 50% of your money in the market and 50% out. Like, don't take that literally. It just means that having some kind of cash position or stable coin position in crypto does make sense because the market is likely to be very volatile. But you also want to have a crypto position too, even if it's just Bitcoin and a little bit of ETH and alts, because the market could very well, pump aggressively into rate cuts, and you don't want to feel like you have all this cash on the sidelines and get like this FOMO and make a bad decision. So having a position, having some positions makes sense, but also having or building up a cash position on the side to take advantage of that likely final dump that is probably going to happen sometime between the first cut and the last cut, more likely towards the last cut. If history is any indication, is a wise thing to do. And I think just staying positive right now that even though um, a lot of signs are pointing to a recession, and we may already be heading into one, that doesn't mean it's going to happen when everybody thinks it's going to happen. It also doesn't mean it won't happen when everybody thinks it's going to happen. But here's the thing: the Fed won't declare it even if we're in one until we're almost out of it anyways. So don't worry too much about that. Just focus on your risk management, one foot in, one foot out, whatever that looks like for you. And I think that's probably going to serve you well even in a pump and dump environment. This market's going to be difficult no matter which side of the fence you're on. Okay. The crab market that we're in right now it's boring. It's really straining on people's emotions, and a lot of people are just kind of giving up. And I think, like, if you notice that happening around you, that's a sign that maybe you should be tuning in and not tuning out. So, well, you are, because you're watching this video. I think we'll end it here. Best of luck to you in the coming, weeks as we head into rate cuts. Just have a strategy, stick to it, understand that you're probably not going to get it perfect. Make sure you have some cash on the side. This is Crypto Simulation Theory. I am the Gaussian Snake, and I have a free Telegram group called the Snake Pit. I'd love to have you there. If you enjoyed the content in this video, please give me a like and a comment if you have anything that you want to add. What are your thoughts? Do you think we're about to have a pump and dump, or do you think that history is going to be different than what's happened in the past, or that we just don't know what's going to happen with Bitcoin? I will add that I do think Bitcoin is likely to bottom before the stock market does. Okay, I want to say that. Just like Bitcoin has been dumping before the stock market dumped, the opposite is likely to happen. I do not foresee a March 2020 style capitulation. I think it's going to be a little bit slower than that if things play out the way I think they're going to happen. But what do you think? Let me know in the comments if you agree or not, or in my Telegram group. And if, like I said, if you like this content, be sure to subscribe to my channel, Crypto Simulation Theory, and I'll be back with more videos on the market very, very soon. Till then, I hope you have good trading, and I will see you again later. Bye.